TREB has released its market numbers for October of 2022, and things are sort of looking the same as far as the trends are concerned. Overall sales has dropped tremendously again year over year, and prices continue to sort of hold the line for month over month and year over year right now. Now, we are going to see a little bit of that. We like to do those analyses year over year. We find that that's our best way to sort of gauge where things are going and where they're headed, possibly headed to. But we are going to see in January and February of 2023, those numbers are going to be wild because last year at that time, the market was going through an absolute frenzy just prior to mortgage rates going up every month and people starting to feel the pinch on that and sort of the market cooling off. So what happened in October? Let's have a look. Sales were down 49.1% and 0.2% from September. So we're still seeing the sort of trend of big adjustment from year over year. And then each month sort of things keep sort of dripping downwards in the number of sales as people decide not to sell in this market, hoping that if they hang on for a little bit longer, maybe they can do better in the spring or summer if they have that option. Now, supply drops when interest rates go up. So we're still seeing that main trend happening, and interest rates have continued to go up, as most of you already know. The average sale price is holding steady. It's down 5.7% year over year, but when you consider that number of 49% of the number of sales down, the average sale price dipping 5.7%, not so bad. Month over month, it's 0.2% from September, so the trend sort of continues. The market is holding the line. The average house in Toronto is still selling for close to 1.1 million and still holding its value. So what does this mean overall? Well, it means that properties in desirable locations and in good condition are going to do well on the market. And what do we mean by good condition? Well, we mean a property that's been mostly or totally renovated, and a new owner is going to be able to step in and not have very little or not very much to do at all in the way of renovations, move in and enjoy their new house and enjoy their new neighborhood. So we showed clients last week in Leslieville and the beach, Upper Beach area, and we saw two different houses that were in pretty good shape. They were in, we were talking about the kind of condition that we were just talking about there. They were renovated. New owners are not going to have much to do when they move into them. And one of them received probably the best one of the best properties that we've seen in a while, received over 20 offers, and it sold for 40% over asking. Now, mind you, they were doing a little bit of fun with the price there. They priced it under $1 million, and they did quite well on it on offer day, obviously with 20 offers. That drove the price up quite high, and the house definitely deserved it. Great location and in really good condition. The other property sold for 16% over asking. It had 4 offers on it, still did quite well, and still a good house in a great location. So we also saw a few fixer-uppers in October that were in desirable locations. So not renovated, but in a good spot. They sold. They were getting like sometimes 2 and 3 offers on them, and they were getting over asking prices. Now, mind you, the over asking wasn't going crazy like it has in some of the years past, but it was still doing, they did quite well. So fixer-upper, good location, still probably not doing too badly. The properties that are not moving, that are sitting on the market for a long time, and there are a lot of them. That's where we see this number of days on the market. It's north of 80% year over year. We used to see properties move, or we are used to seeing properties move a lot faster in Toronto. They are sitting on the market longer. So if you are selling and buying in this market, you can sort of hedge possibly a lower price for what you're selling to a lower price for what you're buying, sort of break even, especially if you're porting a mortgage. If you're porting a mortgage from where you are now, you're not going to be affected in the short term, at least, by those higher interest rates. Maybe not completely. Maybe your new mortgage isn't quite covered because you've paid down. Whatever, you still get a bit of a better interest rate break than somebody coming in without a ported mortgage. Now, those people who are buyers coming into the market and have not bought in this market before are finding good prices. They're finding themselves in situations where they don't have to bid multiple times, always. So, and if you're a little bit flexible as a buyer and you're flexible about location and you're flexible about the condition of the house, you can definitely get a good deal right now. Those houses are sitting on the market for a little bit longer. Those sellers are a little bit more motivated than maybe they have been in years past. So there's good deals available. And if you're a buyer, I would recommend talking to your mortgage broker about a short-term mortgage and something that you can lock in so that you're not going to be sort of battered around by interest rate hikes if they continue on. And you will have that short-term mortgage for a little bit of time until this interest rate cycle sort of comes to an end one way or another, whether we end up sticking at the rates that we're at, or if rates start to come down, then you'll be in an advantageous point when you go to renew your mortgage at that time. TREB's chief market analyst, Jason Mercer, had this to say about mortgage rates. Bond yields dipped, suggesting that fixed mortgage rates may trend lower moving forward, which would help affordability. So it's not all bad news for mortgages, and it sort of depends on your personal position. So we're recommending to all of our clients, don't just read the news and see what's happening out there and think, oh my goodness, the sky is falling. Talk to your mortgage brokers. We have some excellent mortgage brokers that we can recommend, and we'd be happy to set you up with. Talk to your mortgage broker. Maybe you will find out that now is not the best time for you to buy, but maybe you'll find out that you can buy right now and that you're not in such a bad situation as you might think. So where are these mortgage rates going? What can we say about that? Well, I noticed today that Canada added 108,000 new jobs in October. Great news for everybody that was looking for a job. The economy keeps sort of humming along. The GDP last month, I haven't seen the numbers recently, but the GDP last month was holding steady. It actually rose a little bit. If we don't end up slipping into recession, then the Bank of Canada may not be too interested in bringing down the interest rates again. They won't have to deal with a recession, which is generally why they bring them down, is to try and stimulate the economy. But if the economy is still sort of chugging along and inflation is still high, the Bank of Canada is not going to have too much of an incentive to stop its rate hikes, or at least even lower the rate hikes, or the rates as they go forward. So consumers are feeling the pinch still, and that might affect the Bank of Canada's next announcement in December. We're seeing people getting pinched at the gas pumps, pinched on your rent or on your mortgage payments. Some people are locked in, not being affected by that, but anybody with a variable right now is seeing their mortgage payments getting sort of driven up every month, slowly but surely. Maybe you're getting less of your primary covered and having to pay more interest. So if we start to see that happen, the Bank of Canada may not be too interested or too in the mood to raise interest rates again in December, or maybe they don't raise them as much as they have been. So, but that remains to be seen, and it all will really depend on what all of this has to do, or what the effect on spending is for all of this. If we keep spending at the rate that we were before, then inflation will continue to rise. If we knock it off a little bit with spending, then maybe those inflation rates will come down a bit to something acceptable and will calm everybody at the Bank of Canada down. So I will tell you this at the end, because this is important with property staying on the market for longer and with buyers out there trying to look for deals, that please remember that owning Toronto is always looking for business. If you know anybody, or if you yourself are looking to buy or sell at the moment, we have the experience that it takes to get you through these times. And so don't hesitate to reach out and ask us, and we would love to be your realtor. Buying or selling, Owning Toronto takes care of your dwelling.